Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, February the 7th. The year is 2022. Let's talk trading. Price, part 3. These videos are for educational purposes only. Your results may differ from mine. In fact, I got a question from a trader, and they were asking me about the rat zone and if the range of the rat zone has changed, and I answered to them yes. Earlier, I think it was either late last year or right in the beginning this year. I think it was last year. I reran the frequency distribution because Walmart and I noticed that the pound was only having about 70 pips of range, plus or minus usually. Didn't have too many range days over 100. So I reran the frequency distributions and saw that it was somewhere around 15 was the frequency distribution from the high minus the top of the candle and then the low, or rather the bottom of the candle minus the low. It's about 15 pips, but I had created the smart rat, and so it'll go through and look at as many days that you program it to, or you set the inputs to, and what it'll do is it will determine what that 20% level is. And so you can see here from high minus the top, it's actually about 18 pips. I call it 17 pips. But on the other side, it's actually 13 pips as opposed to 15 pips. So that's just using, the current data or the most recent data, as opposed to, say, running it once a week or having to run it once a day. So, but you can see it's just a couple of pips difference. But they were asking me about the euro, so what I'll do is let's go ahead and bring up the euro. So Smart Rat says it looks like it's about 12 pip difference on the upside for the high minus the top of the candle, but on the low side, as you can see right here, it looks like it's about 8 pips. So if you want to tweak your rat zones, go right ahead. If you don't have the smart rat, well, then you'll just have to pick one of those two numbers. Probably pick the lower of the two. So you'll be in a better position to make profit coming out of the rat zone. So I hope that answers that question. Well, let's see. We might as well take a quick look at the charts. The month's still green, 84 pips above the open, 101 off the high, and 93 off the close. And you can see here, that's on the daily. I wonder why I don't have that switched over to monthly. I should probably do that or make it current. Here we have it on the weekly. We are wick zone. We crossed above the top, as you can see right here, and it looks like we're just coming out. Yeah, we crossed below the top, so we're just coming out of the wick zone from the previous week. We're 14 pips below the weekly open, 20 off the high, 40 off the low, and price is moving up. The daily open, you can see 10 pips. Yeah. Now 11 pips off the open. Below it, 18 off the high and 42 above the low. And you can see we broke out of the previous day's wick zone on the bottom there. We are 7 pips above the yearly open, 6 pips. In fact, I'm thinking that we've got a range, and I'm looking to short this yearly open. Have to wait for another signal, but you can see price has been pushing up. So just have to wait patiently. As I mentioned last night, we got into that upper, or rather into the inside bar, weekly inside bar that occurred 3 weeks ago. And still some inside bar action. A lot of, in fact, on the month, there's a lot of inside bar action if you want to set those trades up. On the day, once again, 60 pip range, but we do have 6 pairs over 100 pips. And here we go. We're looking at the weekly daily open here with the buy zone, and you can see we're getting into the short territory. We've had 6, this is the 6th hour in a row, green candles, and we had some very interesting price action. Yeah, lower high, outside bar, higher high, higher low, higher high, higher low. So things are looking up for the pound at the moment, even though most people seem to be wanting to short the pound, me being one of them. Mainly because if you hold overnight, they pay swaps. So that's another thing to consider when we talk about price. Okay, price near the S1 bias is long, but we got close to it. So that proved price near the pivot goes short. The first time it worked right here. Got near the pivot, take that short. Now we've taken out the monthly pivot and we've taken out the weekly pivot already. So anybody fading the pivot this week was paid off. So we finally took out the daily, took out the weekly, and we've taken out the monthly. So for those directional traders, in other words, you're trading towards the pivot, away from the open, you got paid off. I mentioned the wick zone earlier. You can see in and out of the lower wick zone. Trading the lower high, higher low. There was a nice trade here, a nice trade here. Coming off of this 3-ball, a big drop. In fact, was this the trade I was in? No. I got the trade. This was a 3-ball. I think I was in this trade, but I jumped out a little early. And that's one of the things about prices. Can you stay in the trade and take those big pips? And my nature is, for whatever reason, it just doesn't work. Maybe it works for you, but I'm good at taking those 1, 2, 3 pip trades. But I guess what happens is there's so much wiggling, and then usually when you first get in the trade, there's some oscillation. You know, very few times does it just drop when you want it to drop or rocket. So, I mean, right here would have been a perfect example. You get in that trade, you take the trigger, then it goes against you. So then you go up here, maybe you pop out, comes down here and touches, but you're waiting for the right candle color and it laughs at you as it screams to the top. So it's one of those things where you can, if you sit in front of the screen, it's really hard to keep your hand off that mouse button. It really is. So these are one of those trades where it's like, okay, it's made a new bottom. Maybe I'll put a 10 pip stop loss down here and then leave it alone and wait to see if it puts a 3-ball at the top and then and take some pips off the table. That's one way of doing it. It's probably the best way if you want to make money is to set and forget and come back and see what the market did for you. Here, horizontal line crosses with the Walmart lines. There was a short last hour, a long. You see we had a long at 30, breakout at a previous high, and what's here, the 40s, what I like to call the launch pad. So we'll see if price launches or not. One thing to keep in mind is the open at, it's the wrong one. It's right here. Looking at the wrong month. The yearly open, 135.26 area. So price has to range away from that open. And that's what I'm looking to see if I can maybe catch a big trade there. As you can see, we didn't come anywhere close to the ATR range. How could we with such low? One thing I've been working on is the opening range breakouts of the first candles. So you can see here the first minute, we just had a break here, had a break there, and then the first 5 minutes, and once again trading short. Then the first 15 minutes, you can see here that was only good for maybe a pip, but probably you'd already been in at the 5 or at the 1. Price is now dropping. So it's just basically setting up these parameters. And here's the first M30 candle. You can see it broke through, turned around. And just looking to see if you can scrape a couple of pips off the table by taking those breakouts. And why does it work? Because price ranges. So I mean, between here and here is less than it's what, 3.7 pips. So, and we know what the range is on an H1. It's usually around 13 or more this time of day. So taking these breakouts can be profitable. So you can take the breakout either the of the wall mall lines, the sweet spots, or you can do the buy zone every hour, or you can do the opening range. You can just pick one or a combination of those. Sometimes the combos will get you in trouble, but usually not. And then you just have to make sure you take your pips, because as you can see here, if you didn't take your pips and you had a chance, if you stayed in this trade, you actually had a chance at about 6 pips. But if you didn't take your 6 pips, the market took it right back. So if you came down here, rode it back 2 pips, rode it back down, and you can see here, it's telling you, price is telling you, hey, I don't want to go below this 23. So that's what happens. And you know, with the above below indicator that I modified, I wrote this years ago, but I just been working on it. But you can see how many times price was above the current price and below on these candle closes. So a lot of times I like to look at the H1. It gives you a pretty clean picture. So today, 16 hours, we had a close below the current price, and only 2 hours did we have a close above. So picking your shorts, picking your longs is good places to trade. But sometimes looking at this requires you to sit on your hands. And you can see here so far this month, this is about somewhere, we've had 58 in the middle, somewhere in the middle, not of the range, but we had 58 hours, hourly candles close above this and 54 close below it. So that comes in handy sometimes. And the frequency distribution here, once again, I like to use this on M5 to scalp, so I know when it gets a certain distance away from this, it's time to exit the trade. When it comes back towards it, might be time to re-enter. So, fellow traders, if you have any questions, feel free to drop me a line and I'll try to answer them, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.